Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. September the 7th, 2018, and this is the Daily Report for Gold and Silver, our weekend review. Gold does end lower on the week and lower on the day following the release of the U.S. Labor Department's jobs report today. We had a strengthening dollar responsible for gold's decline. Gold futures basis most active December is currently fixed at $1,201.80. That is a net decline of about $2.50 on the day. We are short gold at this point, and we will cover that in detail as we pull up our technical studies charts. Silver did close a little bit higher, up about 3.5 cents, but it has been hit the hardest in terms of the decline recently, with silver currently fixed at $14.21. And as I said, it is dollar strength that is really the underlying cause for the decline in gold today, with the dollar up about 0.4% at 95.38. Now, the Dow Jones Industrial Average closed nominally lower today, down about 80 points at 25,916. Standard & Poor's also declining by about 0.2% at 2871. And the NASDAQ Composite down about 0.25% at 7904. Traders, what we can say is that over the last 2 weeks, we have had gold prices declining from approximately $1,218 per ounce, and is currently hovering at just about $1,200. Aside from 3 weeks ago, and that's this large green candle here, we can easily see that the market has been in a defined and quick downtrend as it broke through $1,300 and now hovering just at $1,200 per ounce. If you recall, earlier this week, we did issue a sell recommendation. Now, we sold into the market once the market broke below 1,200. The following day, it quickly recovered and traded up as high as 1211, 1210, and that's the top of this candle right in here. We currently have our stops at 1218.13, and what we're trying to do is to protect ourselves if the market does turn and then begins to trade back around this area. My sense is what is formerly the floor or a highly supportive area for gold, which comes in at around 1220, I believe is now critical resistance. And we can see that once the market broke below there, we had that solid break, an attempt to recover, and now we're moving back down. And that to me is an indication, at least on a technical basis, that we are looking at lower pricing ahead. And traders, even though the weekly charts provide some pretty solid technical evidence that we are going lower, we really need to see gold trade and break below $1,200 on a closing basis. This is the area that we put our short position on. We weathered out not being stopped out throughout the week, and now we're pretty much back to where we entered. My sense is that once we get a solid break below 1,200, we will go and test the 0.78% retracement area, which comes in at approximately 1178. And traders, the last chart that I do want to look at, a daily format rather than a weekly format. And that is because we can put in our different moving averages, our 200-day and our 50-day moving average. We can easily see that the point in which we are determining this rally to end, which is based upon two technical data sets. The first of those data sets is the fact that we had a death cross identified, the point in time in which a simple correction morphs into a long-term trend. I believe we are still fully immersed in a bear market. The last thing is the fact that we had our first set of lower lows really since December 2015, January of 2016, when higher lows, a series of higher highs. That was up until we hit these highs at around 1370, and that produced our flat top because prices were not able to ascend above that. And then the appearance of the first lower low, along with the fact that we had our moving averages cross, really told me that we are now in a bear market. That being said, I don't believe that 1178 is going to be hard to achieve. I think that all things being equal, this is our first area, and we could, in a long-term basis, see gold prices actually move lower than that. Therefore, my recommendation is to maintain our current short position, maintain our current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you next week on Monday for another daily update and review. Have a great weekend. Bye-bye.